I would laser like focus in on Bitcoin and then think hard about, what are your professional assets that you can bring to bear? What kind of financial assets can you bring to bear? What kind of political assets can you bring to bear? What kind of communications or marketing assets can you bring to bear? And everybody can do something to both benefit themselves and benefit Bitcoin and benefit all the other Bitcoiners if they think long and hard about what's about to happen. Then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve. The thing about Bitcoin is that I think is important to point out is a lot of the security comes from the optionality to move the Bitcoin from one custodian to another.
Hey guys, welcome to Everyday Finance. The Bitcoin Treasury's Unconference is an event where Michael Saylor will assume the spotlight to demonstrate how Bitcoin is revolutionizing company strategy. It is not enough for executives to simply possess an asset. They must also reconsider the way that businesses safeguard their balance sheets, protect themselves against inflation, and get ready for a financial system that is in the process of changing. The concept of Bitcoin is no longer something that is only considered by people on the periphery. It is now a tool that is being used to reshape the way that enterprises with a forward-thinking mindset plan for the future.
When you look at the way that capital is structured in the 21st century, if you're a public company, you can create public securities that meet the requirements of all these pools of capital. That's just useful. That's a solution for them, right? Just like a Chinese pension fund cannot and probably cannot buy a United States-based software company, right? We have lots of pools of capital and they represent real people living, dead, or about to be born. And Bitcoin represents the digital transformation of the capital markets. And if you're going to rebuild hundreds of trillions of dollars of capital, and you're going to give them a path from physical capital and financial fiat capital to digital capital, well, there's a lot of commercial banking to be done. There's a lot of investment banking to be done. There's a lot of money management to be done. There's a lot of journalism and analysis to be done. Someone has to create the securities. We need the auditors and the accountants to account for it. We need the lawyers to figure out how to disclose and assess all the risks. There's a bunch of regulations that have to be formed to clarify, right? There's a lot of work for a lot of people in the ecosystem. And you can make your career being a leader in any one of those areas. There's a dude that figured out how to create electric shavers, and the contribution is it works and it doesn't electrocute you. And it was probably there's an entire company that dedicated their, 30 years to perfecting that thing. And we're going to have the equivalent of those sort of things, right, in the digital assets ecosystem. And that's the inspirational part. There's something to do in your day job. That's how you earn money. But, never forget, right, that you got to see the world as P&L and balance sheet. On your P&L, you should do something, whatever you're best in the world at, whatever you're best. If you're a dentist and you're the best dentist in your city, or you'll have a good job. My advice is make sure you stay on top of the dentistry thing, right? And be a good dentist. On your balance sheet, that's where you want to take the lowest risk. I would generally recommend someone figure out how to buy Bitcoin and just figure out, are you going to custody it or who do you trust to custody it for you? And that's about the extent of the risk you want to take. And leave all of the other risk taking to securities professionals who do it for a living. And they either obsess over it or they obsess over it and then they diversify. Like my view is, I think diversification is a dirty word with regard to Bitcoin. Like once I've decided it, I don't want to diversify. But if I'm trading securities, if you said, well, here's 100 companies backed by Bitcoin, or 100 AI. What are my two best ideas? Digital capital, digital intelligence. If you came to me and you said, well, here's a dozen digital intelligence ideas, well, I don't know if I'm going to put all of my money into one of them, right? And here's 10 companies on the Bitcoin standard. Which one do you trust? Well, you got to think really hard. You better study all those, right? And my job is to obsess over MicroStrategy. That's my day job. That's what I do. I'm not obsessing over the next 27 companies, right? I don't have information into their transparency one way or the other. So I think people should be very thoughtful about that. I think the Bitcoin community is special because the people in the community think longer and harder and deeper about fundamental issues like inflation, demonetization, innovation, monetization, asset macroeconomics. You don't see any gold people thinking super hard about the future of gold with the open source community gold model. And you don't see the art people doing that. You don't see the real estate people, or you don't see the people pitching the S&P index. At the end of the day, their position is just, well, just do it just because. And in fact, the most common position is, well, we know it's probably all risky. Don't invest any money you can't afford to lose. Diversify, and or give me your money and trust me. There's a lot of that, and I think that Bitcoin 24, that model is us moving toward a position where the Bitcoin community, we're actually looking out 21 years and we're thinking about this, and you can take that and you can crank in different assumptions about the US debt and the growth rate of any government. You can create models for any country, any company, any family, any endowment, the United States, all the other assets. And so there's a lot of very good discussions to be had there, and there's a lot of reasonable debate. But I think that welcoming the debate is the beginning of a conversation that elevates everyone's thinking to new levels of sophistication. And ultimately, there's just a lot of businesses, most corporations, what's your treasury strategy? Oh, well, we just buy treasuries and look for something better. What? We just have money parked there until we find a good merger. What? Well, the point is, they'll have a strategy. Their strategy is just not to lose too fast. And Bitcoin is about a strategy of winning. And most public companies, most private big companies, and most startups, they all could immediately benefit if people started talking a lot more about, Bitcoin treasury strategies. And I think this is an exciting time. 2024 is like year one of institutional adoption. I feel like the gun went off with January approval of ETFs. Next January, the second gun goes off with FASB fair value accounting. And then the third trigger is going to be full bank custody. And I don't know when that happens, but I think it happens definitely in the next 4 years. Maybe it'll happen faster. I would laser-like focus in on Bitcoin and then think hard about, what are your professional assets that you can bring to bear? What kind of financial assets can you bring to bear? What kind of political assets can you bring to bear? What kind of communications or marketing assets can you bring to bear? And everybody can do something to both benefit themselves and benefit Bitcoin and benefit all the other Bitcoiners if they think long and hard about what's about to happen.
It is of the utmost importance that you conduct research before investing in any cryptocurrency. The majority of individuals find themselves overwhelmed by white papers, tokenomics, and technical language, which is the primary issue. ChatGPT makes a difference in that regard. It is capable of breaking down projects into simple, everyday language, comparing strengths and weaknesses, and highlighting potential problems with teams, partnerships, or rules. Although it will not provide you with information on what to purchase, it can work as a personal research assistant, making the process of purchasing something quicker, more transparent, and considerably less daunting. It is possible to utilize it to develop legitimate confidence in your selections if you ask the appropriate questions.
I think the three big planks of corporate adoption of Bitcoin are number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money on an accounting basis, it would look like you're losing money. So I think that was the first challenge. The second challenge is fair treatment as an institutional asset, via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real asset. You have all the skeptics saying it's tulip bulbs or it's a Ponzi scheme or something. But of course, the SEC would never approve an ETF for a Ponzi scheme, right? So probably for people that don't really think hard one way or the other about this, the reflexive investors, they're looking for that endorsement from the most important financial regulator in the world, or regulators in the world. So that was plank 2. And I think plank 3 is fair treatment from the banking system. So right now, it's impossible for most major banks to custody Bitcoin, buy Bitcoin, or sell Bitcoin for you. There are a few banks in Switzerland. I mean, there's Standard Chartered Bank in Europe. There are some of the banks in Brazil that can handle the asset. But the major corporations, right, the Microsoft, the Google, the Amazon, the Apples of the world, they wire billions of dollars a month to a too big to fail bank, right? A bank with $1 trillion balance sheet. And right now they wire the billions of dollars a month to buy sovereign debt. They're just saying, okay, take this $1 billion today and buy T-bills with it. And it's like a 10-second transaction. It's routine. They've been doing with the business with the same bank for 30 years, 40 years. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve. The thing about Bitcoin is that I think is important to point out is a lot of the security comes from the optionality to move the Bitcoin from one custodian to another. You can, like, if you had a $10 billion real estate portfolio in New York City, you don't have the optionality to move the real estate from New York City to Tokyo, right? And in certain extents, if you have a large holding of an ETF, you don't necessarily have the optionality to move your holding to a different ETF provider without taking a tax hit. right, without a taxable event, right? This is why cash creates and redemptions are much less efficient than in-kind create and redemption. If you had an in-kind create and redemption, you could actually take a redemption without a taxable event in Bitcoin, move it to another ETF provider, and then swap that for shares without a redemption. So being able to relocate your asset between various counterparties and various custodians and various places without a taxable event is very important. So if you own underlying Bitcoin and you have it with a custodian and you lose confidence in them or you don't like the business relationship, you can move it to a second custodian without a taxable event. You could do that in an hour, right? Practically speaking, a big company would take more than an hour to do it, because just like there's a ton of people on the custody side, there's a ton of people on the institutional side, and so there would be a set of processes you would go through. But that keeps everybody honest and keeps the market competitive, because the mayor of a city knows that you can't move the building, and so they can double the property tax rate, and you're not moving the building, and your only recourse is to try to vote them out of office. But if you're a custodian of Bitcoin, Singapore, and you double or triple the maintenance fee or the custody fee, then maybe the Bitcoin finds its way to fill in the blank, another place, Paris, London, US, different country. Or even if you had two custodians in New York City, the Bitcoin can move between one and the other. We talk about the 19th century gold issue. Gold was like a settlement T plus 1 year, and Bitcoin is, in the worst case, T plus 1 hour. So if you people oftentimes they fixate they think the lesson of Satoshi is don't trust any counterparty. I don't think that's the lesson of Satoshi. I think the lesson of Satoshi is if you can store your money for 1,000 years without a counterparty, you've created perfect money. Right? I think, or perfect digital capital. I think that's the first lesson. And I think the second lesson is if you can move the Bitcoin without a trusted intermediary, now you've got an open global network. And what it really means is that 300 million companies can settle with each other.
XRP is displaying strong indications that it is about to break out. Analysts have observed that momentum is building toward $5.80 in the short term. This is due to the fact that following a September low, there has been a gain of more than 17%. However, the bigger pattern is predicting a surge to over $15.80, which is an increase of over 400%. Adding fuel is the creation of the first U.S. spot XRP ETF under the Investment Company Act of 1940. A milestone that paves the path for institutional inflows. As XRP transitions from being merely a subject of discussion in the alternative cryptocurrency community to being a part of mainstream finance, it is becoming one of the most widely monitored plays in the market. This transition is facilitated by Ripple's growing number of collaborations with institutions such as DBS Bank and Franklin Templeton,